As a forex trader, there's one skill that's going to serve you very well when it comes to trading, and that's the skill of proper risk management. Because without it, guess what? You won't last very long in this market, right? So it's the ability to be able to know exactly how much money you are standing to lose on a trade by trade basis. What I mean is that you are not supposed to enter into any particular trade without knowing exactly, I mean, the exact amount of money you are standing to lose on that particular trade. And if you can do this consistently, it's going to separate you from the rest of the 95% of traders who are consistently losing money in the market. It's a very, very simple skill. You simply pull out a position size calculator, enter the amount of money you think you are willing to lose on that particular trade. Put up your stop loss, put up your account balance, and then it's going to auto calculate how much risk you are comfortable with and how much risk you will be actually exposing of your account. And then you accept, okay, is this okay? Am I okay risking this amount on this particular trade? And if this trade goes against me, am I okay losing this amount of money? It's a very, very simple procedure. However, most people don't want to actually do it. And that's the reason why they get surprised by how much money they've ended up losing on a trade because they never even thought about it, which is very, very strange. Because as a forex trader in the market, you are supposed to be a risk manager first, right? You are supposed to know exactly how much money am I comfortable losing if this trade goes against me, right? Because at the end of the day, you and I have no control over outcome, regardless of how much strategy you study, regardless of how much your win rate is. You would never be able to predict what's going to happen on a trade by trade basis. On that fact alone, that's supposed to prompt you to want to know exactly how much money you are willing to lose or you're standing to lose on that particular trade. And because risk management is the only thing that we have control over in the market. We have no control over whether a trade is going to win or not. We have no control how far the trade is actually going to go in our direction. However, the only thing that we have control over is how much money we are standing to lose, right? So you see a nice setup coming up, right? Looks really, really good. It's an A plus setup. Then you have to ask yourself, how much money am I okay losing if this trade goes against me? And that's the first thought that's supposed to come to your mind. Not how much money am I going to make if this goes in my direction. I know it's very tempting to actually think of the potential profits, but you have to reverse engineer it like Tom Hogarth puts it, you have to flip the coin. You have to flip the switch, right? Instead of you thinking about the rewards, think about the risk. What's the potential risk that you are facing on a particular time? How much money are you willing to lose, or are you going to lose if that trade goes against you? And if you start to think like that, automatically it's going to separate you from the rest of the 95% who are always thinking about the profit instead of thinking about the potential risk. So if you can do that consistently, you're going to be surprised that you're going to separate yourself from the rest of other traders, because you are going to be comfortable with the risk that you've chosen. Because let's say I'm risking $100, I'll know exactly, okay, in this particular trade, if this trade goes against me, I'm losing $100. That's it, right? Even if I stepped out of my computer and doing something else, I know that the risk of that particular trade was $100. That's all. However, now imagine the other side where you don't even know how much money you're willing to lose on a particular trade. Maybe you've risked 50% of your account, maybe 70%, maybe 100% of your account. Guess what? What's going to be happening to your psychology then? It's going to be messed up, because you'll be very anxious because you don't know how much money you're going to lose on that particular trade. And then you're going to be checking your phone every 2 seconds because you just want to see the market going in a direction because you don't want to lose. It's a very, very sad way of trading. And if you're doing that, please stop doing it. Simple. Just calculate how much money you are standing to lose on that particular trade, and accept the risk in advance. Tell yourself, I'm okay if this trade went against me and I lost it because I've calculated my risk. It's a good setup, it's an A plus setup, and I've taken it because I believe it aligns with my strategy. Not that you know it's going to go in your direction. It's about having a long-term mindset where you are consistently executing your strategy over time, not expecting any particular trade to actually win. However, knowing that and being fully confident that if you continuously executed your strategy over a series of trades, you are going to be profitable. And that kind of confidence doesn't just come anyhow. It comes through having back tested your strategy, forward tested it, and made sure that your strategy is actually profitable. And guess what? Regardless of the outcome of the previous trade, you are going to be obligated and compelled to take the next trade because it meets your criteria. And you're going to apply risk management, knowing that if you do that long enough, you are going to be consistently profitable. And that's the confidence of a professional trader, not a gambler. If you just gambling on every trade, whether you have no data on your strategy, you just swing it, guess what? You won't last very long, and your P&L is going to be fluctuating. But if you are consistently executing your strategy, you are consistently applying risk management on every trade, it's just a matter of time before you are actually consistently profitable. So you can do that simply. Just there are a lot of position size calculators out there. Choose your favorite. I like to use the one by my FX book. I just do that, I enter my figures, and then it will just give me how much money I'm actually lot size I'm supposed to use on that particular trade, and the percentage I to show, okay, this is 1%, and then I'm losing like $250, and then I'll just do that. I'll just get at those numbers and then plug them there. Simple. And then I'll just go walk away, and whether the market is going to go in my direction or not, that's not none of my concern, because I have no control over that. That's not in my circle of control. So the other thing is, after you've predefined the risk, how are you going to make sure that you are getting paid? And that is very, 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 very important. So there are two ways you can go about it, right? You can be trading the stop loss, and then you can be taking partials. So it's all about what you're comfortable with. If you're comfortable with taking partials, by all means, please do that. And if you're comfortable with trading of a stop loss, please do that. Of course, they all have their own advantages and disadvantages, right? So it's all about what you're comfortable with. You are supposed to be consistent with that. So choose whatever you want and then go with it all the way. So for example, one of the good side of trading a stop loss is that you'll be able to actually catch the whole trade with full volume, which is really, really good. However, the downside to that is that most of the times the market can actually tag you out maybe at 1 to 2 hour, and then the market goes all the way to full take profit, and that's a downside to trading of a stop loss. And then with taking partials, yes, you're going to be reducing your position size, thereby reducing also the potential profits that you'd have made on that particular trade. However, the good part is that you'll be able to catch the whole move because the market won't take you out. So it's all about what you're comfortable with, and do some research on that. And then once you are comfortable with it, then you can go ahead and actually do it. But you have to find a way of actually paying yourself consistently if you want to make money in the market. But you have to know exactly how much you are risking per trade. If you want my recommendation, I recommend risking 0.5% to 1% per trade every time. And that's what I recommend to my students. All right. So that's how it is, guys. I just thought I would actually come here and do some ranting videos, a raw video of me actually explaining about risk management. All right. So it's my hope that you actually found value in this video. And if you have, kindly subscribe, like the video, comment in the comment section, and let me know what you've learned from this video. All right, you guys, until next time, goodbye and take care of yourselves.